Hi there. My name is Wamboi Daniel, and I'm glad to have you here. So today I want to take you through an analysis we do with my students when they're just about to start practicing on their demo. So we make a uh, three-step analysis. So first, we want to know, has the market broken a swing high or a swing low? So let me just draw the swing high and swing low for you. So this is the swing high. And people call them many names because I call them swing high so that I can explain well to my students. And people are going to use support and resistances. I am going to use swing high, and I'm also going to use zones. So I don't want you to cram it. I just want you to understand it. So when a swing high is broken here, and by breaking, I mean if a candle body closes above this swing high. So if this leg, a candle body closes above the swing high, it means that structure has been broken. So if you think about it, who are trying to push the prices up? It has to be the buyers because they want to push the prices up because they've already bought it. If you had sold it, you don't want the prices to go up. So what you do is if there's a break of structure up, it means the buyers are stronger. And if there's a break of structure below, it means the sellers, sorry. Let me just draw it here. So if it was a break like that, it means the sellers have gained momentum because they have been able to move prices lower than the prices had been moved before. So we're either looking at a break of sell high or a break of sell low. So something else you need to understand is you need to sing this song. You buy low and you sell high. What that means is you always buy at swing low because you don't want to buy, you need to buy something when it's not very expensive. Even in our normal life, you're looking to buy something when it is not expensive and you sell it when the supply is too much. Or you release it to the market. So it means if you're going to buy anything, you're going to buy from here. If you're going to sell, you're going to sell from here. So let me give an example. If the structure was like this, it means it has broken a swing high. And I said, if the swing high has been broken, now we're looking to buy, but we always buy on swing low, which is this one, right? So you're going to come and draw your zone here. I'm not sure how most people draw their zones, but we practice how to draw our zones in the class. So what you're looking for is the market to come back here and you get your zone, not your zone, you get your buy entry. For example, the market might not come straight. It might do a lot of things, then finally touches your zone and you look for a buy. And at this point, if you're going to enter a buy there, you're going to put your stop loss right below here and you take profit, you can put it near the farthest the market had gone before it turned. So this will be your swing high, this will be your swing low, this will be your swing high. So this is what you hear people say break. Then this coming back to touch the zone is called a retest. Then you look for an entry. So you have to wait for that, those three things to align. So there has to always be a break. So once there's a break of structure, it's when you draw your zone. The market has to come back to the zone. Then you look for an entry. So if it's, let me use smaller lines so I can share the space. Just a minute. So I want to show if it's a sell. So cannot put, have to put your stop loss a bit low for it to have a good space. So there are people who are going to use this broken zone and wait for a retest there. For me, I don't like the broken zone. I want the extreme one so that I can get a very high risk to reward ratio. So if it's a sell, it's going to be the opposite. It's going to be a swing low has been broken, and you wait for that to come back to the zone and you look for an entry. So this is what that was broken. And if you're going to sell, we sell at swing high, which is our current swing high, this one. So that's where you're going to draw your zone and you wait for market to come back. And when it does, you look for your entry. And so many scenarios can happen. It can come and break that structure. If it breaks this zone, then it means we've moved from from a sell to now this structure to a buy, because this is now the swing high. And if sometimes doesn't come back to this zone and it comes and break this, every time there's a break, you just do the structure break, retest, enter. Every time there's a break, you draw a zone. So if, for example, this did not touch there and it came and did something like this, we will have moved this zone from here to here because that is our new high. And now we'll be waiting for the market to go back there and we look for a sell. So, but for now, let's focus on this. So here we're going to put your take profit. We'll call it TP. And here we're going to put our stop loss. We'll call it SL. Those are just initials of stop loss and TP and take profits. So this will be our SL. And this will be your take profit. So if you go and try all the three of them to be aligning, that's break, retest, enter. I see this is the break, meaning a candle body closed above the swing high. Then you have to wait for the market to come back and touch the zone. That's the retest. Then you look for an entry. Same case here. So this is for a buy entry. And this is for a sell entry. So for now, we can have learned this. If you go and apply this to the chart, it's going, not all the time it works because there's no strategy that is bulletproof or has profits always, but it's going to give you a good risk to reward, and the losses are not as much because what you do is you do this analysis in a higher time frame. Then when the market comes back to your zone, you use a shorter time frame for entries, or you can still use the same. You can still use the same time frame. So for example, I'm going to show you this structure on the daily GBP JPY. So if you look at GBP JPY right now, if you don't know where to start, you can start from the most obvious you can see. For example, here, that there was a swing high here, and this candle closed above that swing high, right? So if you look at that candle, where was the swing low for this? Because in this case, this is the swing high after it has been broken, and the leg had started. You can either put it had started here. Some people are going to put it there. Some people are going to put it here. For me, I'm going to use the most recent high. So I will not ignore not the high, the most recent low. So I will not ignore this. So I am going to use this because it's the most. If I draw a zigzag going up, like I tell my students, always look at it and draw a zigzag going up so that you can be able to see your most recent highs and lows. This, I cannot call it a high and a low because that's consolidation, so it goes like that. So my most recent low is this. And if I'm looking to enter buy, I have to enter buy from a swing low. So I'm going to come and draw my zone here. And if you check this other side, we were waiting for market to come here and give us a buy, which did not, it broke below. So after it broke below, it means now we have changed from looking for a buy And now we are looking for a sell because they have broken a swing low with this candle body. So I'm going to move that to where is my swing high, because that's where I need to enter market from. It's here. So I'm going to draw that zone there. And now we were waiting. So we moved this from there to here. So that was our break of structure. We call it BOS. So that was our first condition. There was the break of structure. So when that happens, you draw your zone. There was a retest. We were waiting to see if it's going to go back there or retest or break here. So if they try to break with the wick, just cover that wick. So what happens here at this moment, we are trying to get a sell entry, but you just don't enter sell blindly. You can use candle patterns. You can actually use D1 here. You don't need to go back because you see there is a good risk to reward, because in case you get a short position from maybe this point and you put your stop losses right above and you come all the way down for a take profit. I think I put that stop. Yes, you see, you're going to get a risk to reward of 1:3. And these are many days. So as we go down, you'll go add in with your shorter time frame. You can use H4, you can use H1. So for now, what you're doing is we're waiting for a sell here. Nothing shows me sell right now. I am just seeing indecisions, weakness, and this is shown by this doji. The first doji, the second doji. So it means the buyers are not very strong as we speak right now, unless something happens. So, but at this time, you only have to wait for the market to show you where are we going. And how they show you is they give you a candle. If you're going to go down, then they're going to give you a candle that shows the market is going to show you people have started going sell, like the sellers have come in, because you see this was a strong buy, and when you see this weakness, it means the people who had made this buy are taking their profits. And you can see it was a very strong zone because the market has touched that point. This is the first time, the second time, no, this is the third time. So here it's a wait and see. If we get a long candle showing us, a long red candle showing us that the sellers have come into play, then you're going to enter sell, put our stop loss, and our take profit will be on between this point and this point. And if the market breaks above, let's say, for example, a candle closes above here, then it means we're going to come and draw our zone here, because we will have moved from a buy. Now we will have moved from looking for a sell, looking for a buy. So we will have to wait for market to come down here, and we get an entry. Like I said, it's always the same structure: break, retest, then you look for an entry. So for now, we're waiting and seeing. We're looking. There's a possibility the market can go and give us a sell, but you don't tell the market where to go or where it's going to go. You wait for it to show you. So this is the structure we have right